Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's Deep Dive. Tonight is October 25th, 2017, and I've chosen the 10-year notes with the ETF IEF as my focal point. And what I'm going to do tonight is just kind of set the stage for watching this market so that we can actually trade it going forward. So bear with me here. So the trends are to the negative, and we've got the technical rating to the negative, and that's to be expected, especially when we take a look at the 10-year notes. This being a daily bars, you can see this interesting bar that occurred today where it sold off quite a bit and then recovered, kind of similar to what we saw in the S&P 500. But this one's a little more interesting to me because of some support and resistance levels that have been popping up here. So let's get right to it. This is the major support here, this 38, and if we cut across there, we can see that that's essentially where the close was on the day. I'm doing this particular presentation around 4:30 or so things can obviously change, but the closing value being in and around this particular support level. The low of the bar hit this particular support level, which corresponds back with some other levels as well. So bottom line is that we've got an energy, not a level, as I always quote, but an energy support level where you have a key support level when you go back in time, this one going back to this one, so they're obviously interconnected, and then you have some other key support that's right below it. And when you get that sandwich effect, you get an energy zone that occurs in between them. So it wasn't a major surprise that it should come down and then bounce off of this, because think of it as a super strong or super wide support level. So that being the case, I just want to point out a few things. In the past, I did a deep dive back on October 11th. And in that particular deep dive, I was talking about the fact that the market had found support with the 200-day moving average. We are working off a wave low, and in fact, this is where the wave low of it's very dark. You can hardly see it here, but the wave low being in and around this period right through here, that the market did rally. Then it reversed course, and since that time, the systems have fluctuated quite a bit. We had been long, and then they started flipping over. So right now, if we take a look at the systems, we will find that, if I can find it here, that the systems are mixed up here, mixed meaning hedged. So I want to point out a few obvious things here that I do get questions about when people look at the website. So this particular trade up here went flat today. It was a short system. We liquidated the position. It says flat. There's no open position. And if you were to look at the exit systems, you'd see that this is being transferred over. It stays on the page, the chart, if you will, just so you can see that something did take place today. And then we had a new position, a new long position at the tail end of the day, which is still filling in the information as we speak right now. So if we negate this trade up here, which is flat, we have a long system and we have a short system. So obviously we're perfectly hedged, which makes sense given the fact that the market has sold off, and since the 11th or so, we've been sort of in flux. The market has turned over. We did break the 200-day moving average. We've been toying with this very small support level there, and we've been obviously working in around the support level here, which is at 124 and 17, 17 and a half, and then we have another one over here which is at essentially on the low end of 124. So that's where the market has found some support to the market. So with the fact that the markets are actually hedged, as far as our systems go, what is it that we're going to be looking for? So I want to introduce a new chart here where we do an intermarket analysis between the S&P 500 and lots of different variations. This happens to be the primary market being the S&P 500, and the secondary market being the 10-year notes here. And so this right through here, this blue line, that represents the S&P 500. The black line represents, in this case, the 10-year notes. And I just want to point out that we're in a gray shaded area, which means that the S&P is outperforming, no surprise, the 10-year notes. And typically, once we get past that phase, I'm not saying when that's going to occur, I just want you to watch this particular chart, watch every day along the way. And the fact that we had a dip in the S&P 500, there's a good chance that when we finally get out of this gray area, as we have in the past, what we'll see is little sell-off periods to the market. Sometimes they can be dramatic, as we had over here, and it's sold off for quite some time. This, looking at the blue bar, we can see that the market went sideways. This one didn't pan out. This one over here, after a really strong surge, the S&P, it did take a break and did fall off. This one had a break. This one had a nice little sell-off. So the point is that once this phase is completed, and watching the 10-year notes and the S&P 500, and obviously the individual systems trading the 10-year notes with this hedge position, I think we'll get a better feel for whether or not the 10-year notes are going to start to rally up, or if it's just going to be a sell-off that is going to occur in the S&P 500. So as an S&P trader, you might want to be looking at this, but it also bodes well for the potential, we'll see what happens, for the 10-year notes to actually start to rally to the upside. So with this deep dive, I just want you to realize that things are negative. There's things that are brewing where we have conditions where some patterns have not set up yet. I'm not going to show them, but we have some bullish divergences, which would be positive for the 10-year notes that are cropping up. I just showed you the intermarket that is setting up, but it's not there just yet. That could set the stage for a nice buy side for the 10-year notes. We'll see how things kind of play out here, but until then, the systems are most definitely hedged, with being both long and being short, and we're waiting for how the market is really going to react to this energy level, energy zone, not level, but energy zone between the support and the resistance levels. So we'll see how things kind of play out here. The other thing I want to point out is that I have completed all of the different videos. So if you come to membership, you come down to core analytics overview, what you'll have is an overview, and then you'll have 3 different videos that will talk about perspective, context, and trade action. And something that if you really want to understand the philosophy that I follow, the systematic approach, understanding the markets, their personalities, understanding the environment, as I just showed with the inner market, then that's the type of thing that we'll talk about when we deal with context. And then the trade action deals with the actual systems and how they interact with one another. And in our case right now with the 10-year notes, we are being hedged in that particular position, and we're just simply waiting patiently for the market to react. So that's tonight's deep dive. Hopefully you're getting more information about how it is that we go about doing certain things. So I certainly encourage you to come to membership, go down to core analytics. This is available to everybody, and just look at these 4 videos. They're no more than 6 minutes long, and something that will at least give you some ideas as to some of the materials and content that we actually have on the site. So thanks very much for watching, and we will look at another market tomorrow. Bye-bye.